Ghazali, right? This is right
Yes.
pronunciation? Okay,
Yes.
perfect. Group CEO of Credel, Malaysia. So please go ahead with your keynote.
Thank you very much. First of all, good evening, everyone. I've got a couple of slides here. If I can just, can everyone see? Is it on the screen? Hello?
Yes, I can see.
Okay, all right. Okay. So, first of all, just give me a little bit of time just to introduce myself, and that gives you a context on why I choose this topic. Join Cradle, which is an early stage startup funding agency by the Malaysian government, 1st of June. And this is actually the first time that I've joined an organization that's involved in startups. I have been working in corporate prior to Cradle. I've been working in various corporates for over 20 years. So it's quite a big change for me from the corporate and working with an organization that deals with startups. Back in 2015, I started an innovation team at a Malaysian conglomerate, one of the largest Malaysian conglomerate that is in the business of plantation, property, automotive, industrial, healthcare, and retail consumer items. So I headed the innovation team there, and during my tenure at Sandabi, I set up a lot of corporate startup partnership, and I just wanted to share with you on how my experience when I was doing innovation at Sandabi, which is a large corporate, and how I combine that with my experience now. Just to give you a little bit of a context, Cradle has been around for 16 years. We have funded over 1,000 tech startups. One of our successful stories is Grab. So we were one of the early stage funder of Grab in Malaysia. So that's a little bit of my background and corporate startup partnership. There are a lot of benefits to it, a lot of also challenges. When I was at Sandabi, one of the major benefit is the fact that we felt that by partnering with startups, we get to innovate faster. We get to do a lot of things quicker, and in terms of reiteration, it's a lot easier as well compared to if we were to try to innovate within the corporate itself. And plus, the cost of failure is also significantly smaller compared to if, let's say, corporate were to do that innovation themselves. And hence why when I was at Sandabi, I studied a lot of innovation via acquisitions through startups, and I just wanted to share with you some of the things and what we saw now, and especially now at Cradle, I'm also trying to push corporate startup partnership and what some of the successful stories that we have seen. So I thought I'll share with you. It's quite short, so I hope I can go that through quite quickly. So just a little bit of a background. 97% startups are interested in corporate partnerships. So almost all the startups that I deal with on a day-to-day basis, they're always trying to ask around how can we partner with corporates, because that's one of the quicker way for a lot of the startups to scale. If you deal with one corporate partner, they, especially if it's a large corporate, it gives an opportunity to scale up. 83% of the startups actively try to establish contracts, so i.e., they'll go from one corporate to another. But however, as you can see, only close to half of them manage to get at least one partnership. First of all, it's even difficult to initiate the partnership, and let alone the tougher bit is to to have a successful partnership, that's even tougher. And I'll go through with you why. Why corporate startups partnership with solo? There's just so many, challenges. It's significantly more difficult, than a lot of people think of. Um, and not just from the startups point of view, from the corporate point of view. From the startups perspective, when I was at Samdabi, when we were dealing with a lot of the startups, they don't have the luxury of time. They want to do things quickly because they're chasing for numbers, they're chasing for revenues, they're chasing for subscriptions, and normally most of the startups, they don't have enough people as well, especially those who are at the sort of a pre-seed level. They probably have only about 10 to 20 people, and majority of their staff, they multitask. So they find that when you need to do 20 steps, 30 steps, they find that it's not quicker enough because they're chasing for revenue. Whereas corporates tends to be a little bit more prudent. They tend to be a little bit more cautious. So for them, taking time is always that's the way how corporate works. So from startups perspective, a lot of the times they don't have the patience. And milestones and timelines, every time that they want to change something, and that's the experience that I felt at at Samdabi, is they want to do something slightly different, they need to come to us and get approval. And and from a corporate perspective, sometimes not everyone has the authority to make those changes. No transparent decision making process. That's quite typical because corporates will see from their point of view. They want to protect themselves, and so does the startups. Cultural gaps. Like I said, corporates are a lot more cautious. They have their shareholders to answer to. They have various regulatory bodies that they have to answer to, unlike the startups. So the way how we do work, corporate, are very different from the way how the startups do their work. Insufficient resources from corporate side, yes. Again, even though corporate, sometimes they have hundreds of thousands of people, but a lot of the times, they try to do a lot of things, so they can only put aside a very few people to manage the projects that they're working on with the corporates. No proactive engagement. Everyone's very busy because a lot of the times, when I was at when I was at the corporate at Samdabi, even though I have a couple of partnerships, I have 5, 6 other different responsibilities that I have to do as well, and plus a lot of reporting that we need to do at the corporate side. Lack of concrete and measurable. That's a typical project challenges from corporate perspective. So I was reading this article from the World Economic Forum, collaboration between startups and corporates, and from corporates perspective, why they are facing so many challenges. A lot of the times, they felt that it involves very high effort, which I tend to disagree, because everything requires high effort. So it's not just about startup corporate partnerships, and the deliverables. So it's very important that whoever at the corporate side, when they are involved in such initiatives, that the KPI is also incorporated. Some of the failures that I saw when I was at Samdabi is that they felt that there's no KPI with regards to some of the projects that they do, and hence it gets deprioritized. So if as a corporate, if you want to innovate via startups, you have to make it as a KPI. Working and communication styles are very different. A lot more paperwork at a corporate side, whereas not necessary at the startup side. Startups, they make decisions very fast through WhatsApp. Yes, that's it. Whereas at corporate level, maybe they need to fill out a number of forms, do papers, go to committees, and etc. So the styles are very different, and especially if the startups have never worked at a corporate before, they will find that very, very peculiar. They will, and I find that some of the startups that I work successfully with are those who have been a senior level person at a corporate. Then they can understand what are the expectations that is required from the corporate side. So not invented here problem. I sometimes a lot of the issues that I have when I was at a corporate is that getting stakeholders buy-in from various parties, either from the IT side, even though I was the head of group innovation at Sime Darby, but the innovation doesn't come from my team. The innovation comes from the business lines, from the frontliners, from the marketing team, and hence sometimes they felt that if the idea or if the solution doesn't come from them, they won't necessarily want to give in the buy-in. And if, let's say, we make some recommendation that perhaps some of the solutions or some of the problem statements that you're facing now can be addressed by someone external. So a lot of ego as well that we have to manage with a lot of the business units, because they felt that, I've been doing this job for the last 20, 30 years and I know best, and what do these startups know, and that is some of the challenges that I used to have to deal with when I was at a corporate trying to innovate. A siloed approach, a lot of the times, especially with big companies, different people, they're not communicating with each other. You have different milestones, different priorities. Say, for example, if I want to get an agreement, between some business units with the startups, it may not be a priority for the legal department to look at that. So it's because not everyone sometimes believes in what you're trying to do, and especially if you're trying to get the buy-in from various sections. So what we found is that some of the more successful corporates that have been successful in innovate with startups partnership is that they have a small unit and they are given a lot more empowerment compared to, say, for example, if they were to do the same at a mothership. So it's separate out from the big companies, and that what we found is that there, it's like a sandbox on its own, where you can do a lot of trial and tested in the exact environment. We found that some of the corporates that we work with that have that processes tends to do a lot better compared to those otherwise. And so that's which I completely agree when I was reading this article from World Economic Forum. Now, from my personal experience as well, when I was at a corporate, I find that it's not easy to find credible.
Sorry.
Yes.
Okay.
Yeah.
Yeah, we have 3
Can
minutes.
you hear? Oh, okay. All right. I'll make this very quick. So I find that it's
I'm sorry.
a lot of the startups, they don't have track record, whereas a majority of the corporates, when you want to get approval, you need to feel very comfortable of their ability and the reliability. Key man risk, one of the big questions that I always tell the startups: if you want to work with a corporate, what will happen if, let's say, the founder had something happening to the founder? How is the corporate going to protect themselves, against this risk? And of course, the governance process. So yeah, I think that is, if that's all the time that I have, I suppose I'll stop that now for now. We don't have a Q&A, right?
Yes, we don't have Q&A. Yeah.
Okay. All right.
Okay. Thank you very much, Rafiza.
Thank you.
Very insightful.
Yeah.
Thank you. Thank you for your talk.
Okay.
Yeah.
Okay.
Thank you. Bye-bye.
All right. Thank you. Bye. Yeah.
evening from Bangkok to everyone around the world. My name is Ploy from RISE, Corporate Innovation Powerhouse based in Bangkok, Thailand. I'm super excited and very honored to be here as a moderator for our 30 minutes panel discussion under the topic Corporate Innovation Trends, APAC in the COVID time. First of all, I would like to welcome all the panelists. Let's get started with a self-introduction first, beginning with Linda.
Oh, hi everyone. Thank you for having me. So I'm based in Sydney, Australia, and I am happy to join in the discussion. I actually have a mixed background of working a lot for corporate, but actually I'm working a lot in the startup ecosystem at the moment with a lot of incubators and accelerators, and happy to talk about how I've seen, particularly in Australia, how corporates and startups are now starting to work together and partner, and how that's sort of impacting, I think, the way corporates are looking at innovation, at least here in this part of the world.
Next is Charles.
Hi, everybody. Very glad to be here. And my name is Charles. At the moment, I'm in Shanghai, Beijing, and traveling a lot in China. Previously, I was CIO of McDonald's China. And before that, I was the chief architect and the chief data officer.
Oh, I think he lost.
We've lost Charles.
I think how about like we will begin, we pass to Patrick first.
Thanks, Ploy. Thank you, Eva, and thank you for inviting me on Digital Week Online. I'm Patrick Sang, chairman of the Sangs Group. We're a China-focused single-family office headquartered in Hong Kong. We also have offices in London, Beijing, and Shenzhen. So we invest in early-stage ventures globally in China with a view of taking them overseas and then eventually exiting by IPO. And we also take companies investing in outside China with a view of entering the Chinese market. And real estate is our core business, but we do a lot of tech-related projects, including AI, live streaming, e-commerce, and different various types of tech. And we try to bridge China to the rest of the world.
Thank you. I think we have, okay. So next, Kun Sam, can you introduce yourself?
Yeah. Okay, hi Linda and hi Patrick. So my name is Sam. So I'm managing director of the Krungsi Finovate, which is the corporate venture capital of Krungsi Bank, the fifth largest bank in Thailand. We are under the Mitsubishi Financial Group, MUFG. So basically I'm doing working with startup and co-project with startup and also investing in the startup. So recently we invested about 10 startup throughout Asia. And also I'm the head of innovation of the Krungsi Consumer, which is the subsidiary of Krungsi, managing the credit card and co-brand credit card in Krungsi.
Thank you so much. So let's begin for our first question. So during this crisis time, I would like to know like how like the COVID situation like impact your company and how do you dealing with that? Beginning with Linda.
So it's challenging times. I think I work, so basically I'm on the board of an incubator here, but I also actually work for a startup neobank. And we've been impacted in different ways. In terms of the incubator, obviously that's a physical co-working space, but we don't invest in the companies, but we've suffered quite a lot, as well as our resident startups, in the sense that we provide a physical space for collaboration, and a lot of people are now working from home. So our main revenue stream has dissipated, but also for these early stage startups as well, who are trying to raise capital, that's challenging for them. The government has been very supportive in terms of lots of monetary support, etc., but it's still quite challenging. A lot of their respective customers in terms of their go-to-market strategy. That's been impacted as well. In terms of the neobank that I'm working for, we've been trying to raise capital, so that has impacted our launch. However, we've been busy sort of trying to build, and actually it has in terms of sort of the macro environment, I think it's actually sort of suited us to delay our launch somewhat. But what I would say is, crisis times are times of opportunity. I also sit on the board of an angel investor group, and interestingly, we were expecting to see a lot of turnover and attrition in our members, but actually we've seen a lot more people join. I don't know whether people who have the interest and the time and the money are now thinking this is an opportunity, and they've put their hand up. However, what I would say is we're probably seeing at a longer time to do deals, and probably smaller check sizes being written, I would say. So it's quite uncertain times. It's still not clear how everything will pan out and in what time frame. But I still have seen, it's not all doom and gloom. I've seen some startups which are certainly sort of COVID proof, or even actually COVID has actually helped their solution. So I don't necessarily think it's Armageddon or anything. And I would just say that, I mean, in every jurisdiction it's different, and I'm sure we'll hear from the other regions. But in Australia, the government has been very supportive to small business and in terms of the types of relief. And I think the investor community has been actually quite good also. But I would say we're going to see prolonged timeframes.
Thank you so much. So I think we got Charles back. Yeah, I think you are.
Hi, sorry for the connectivity issue. So I was in the middle of introducing myself.
Yeah, please.
Yeah. Previously, I was working in the energy trading business. I'm back in this sector again, and I'm working for a group of company called ENN China, which is a massive private-owned company, and also publicly listed companies as well. They are specialized in the natural gas, clean energy, as well as health sector. Because they have a massive customer base of 23 million families as their users. So I'm very interested in sharing some exercise we are doing in terms of innovation investment within the corporate, because it's a massive group of companies. Yeah, we'll talk about it more later. Thank you.
Yeah, so I think I will ask you next about please let me recap about the question again. So I was asking about during this COVID time, so how does it impact your company, and how do you dealing with that?
Well, because of the nature of the business, it's actually clean energy. So we did suffer some slowing down, but however, we did have increase in terms of revenue, profits. It didn't meet our expectation or our plan earlier. So compared to a lot of other companies, we are very we're much luckier, to be honest. That's what happened. Because what happened is, although the initial quarter definitely we have a slowing down in terms of economic activities, but the electricity needs, for us, it's energy needs, recovers very soon. So and of course, it didn't really affect our residential areas kind of energy supply and demand. So yeah, we are in a very lucky state. That's why we starting from the end of quarter one, we actually began a very massive reorg for the headquarters, which I can share later. Actually, we are focusing on more investments in the AI, IoT, of course, blockchain as well. So we can share that a bit more later.
Thank you, Linda and Charles. We'll go next with Patrick.
Thank you, Ploy. I think COVID has been obviously a strange year for everybody. it's truly a global phenomenon. As I think Linda said, I think all types of crises, there always presents a lot of opportunities. So from an investor standpoint, from a family office standpoint, it's actually a great thing for an investor. However, obviously for society and for a lot of the employees and their families, it's been a very tough time. In Hong Kong, for instance, in China, people are living in smaller apartments. So working from home sometimes isn't as great as what we do. So we've tried to be, we're managing like the financial part very well, but on an emotional and sort of taking care of our employees and some of our people, we've had to be very caring and also thinking about what's best for them. Actually, you'll be surprised that a lot of the staff have ended up wanting to come back to the office to work rather than be stuck at home and working with, 5 other people at home. But on the financial side, it's presented a lot of opportunities. In fact, COVID this year has been one of our best successes in terms of financial return. Although we are sector and location agnostic, we are very global orientated. We've made a lot of significant returns in the stock market in both the US and in Hong Kong. We're at the beginning of the juncture. We are a real estate focused company, but we've evolved and started to invest in a lot of tech, clean tech, a lot of various different industries. And the tech stocks have done extremely well this year, as you guys know. And we're looking to, in terms of investment, we're looking at a wait and adopt attitude, whereby 2021, we think that there's going to be a lot of companies that will be not doing as well, needing a lot of cash, and the valuations will be much lower. And as a result, we'll be able to get in at a much better price and then take these companies public. The US-China trade war has also been significant, coupled with COVID, that a lot of Chinese companies listed on the US stock market have now flooded back to Hong Kong to do dual listings, including NetEase, JD.com, and then the big giant one coming up, which is Ant Group. So it's all about being able to identify the opportunities. One example that we've done recently is a portfolio company called Fubo TV, which recently just listed on the 8th of October on the New York Stock Exchange. We invested 2 years ago, and we finished the merger in the US in March during the COVID time. I completed the deal, and then I came back to Hong Kong, and we made a 50x return in 2 years, which is probably a record-breaking return for us. So there are opportunities out there. We had to navigate very carefully, work very hard with our partners, and I think the only constant, as they say, is change. So it's the way for investors to deal with this crisis is about adaptability on all fronts. So it's been a good year for us.
Thank you, Patrick. Pass to Kun Sam.
Yeah, I think I'm in Bangkok. So as you know, as the situation in Bangkok is for the COVID is pretty good right now. I think we hasn't been hit on second wave yet, but back to the situation of the economics and the startup in Thailand is remain the same, but it depends on the techs. So the techs that related to COVID, affected on the business side, like travel tech, might be very sad on that tech because of the entire Thailand economy is related to the tourists. So the kind of these tech would be highly affected. However, for Krung Si, that we working with tech right now, so we have strategized on the investment strategies to focus on the tech that would be flying during the COVID. So during the COVID, we have been investing in 3 startups. The one we just released yesterday is an e-logistic. They are the third logistic provider in Thailand. So because they have very successful during the COVID. The other one is agri-tech. So no matter with the COVID, the agriculture in Thailand still need some technologies, and it hasn't been affected on the COVID side. So we have been invested in agri-tech. The other one, which we already invested, which is the InsurTech, So have you seen during the COVID, people is highly demand on the insurance side. They are not the online insurance seller, but they are the insurtech infrastructure. So helping the insurer to sell the insurance easier and more productive. So this kind of thing we have seen that the technology might not be affected during the COVID. So we still be investing. Some that has problems during, or some has not much cash to be run during this. So right now the government has some injection during this period, but we still don't know how much and how long that they could be surviving during this time.
Thank you. Moving on to the next question. Do you see any fundamental changes or trend in the corporate innovation during this COVID-19 times? Linda?
I think it really sort of depends on what sector in the corporate landscape. I think, there's obviously some sectors that are impacted more than others due to the pandemic, and there's a lot of corporates that are sort of, they've had to rationalize staff. They're really sort of sitting on their hands, and there perhaps isn't the budget that's normally there to spend on innovation. Where there are others where, it's still as per normal. And I think also for Australia, and maybe actually for other regions, been a lot of government support, and there's been a lot of focus on what happens when that government support is turned off. Do you know what I mean? And in Australia, that's continuing until March, and then the taps are turned off. And that's not just in terms of wage subsidies, but also sort of small business loans and other support. But I would like to think on the whole, aside from the pandemic, I've seen some positive trends in sort of corporate innovation on the whole. And I'm hopeful, we can kind of navigate through that. Definitely in Australia, there's been some maturing in the way that I think corporates view innovation. It used to be very internal, and people would have their innovation labs, and they wouldn't really interact with the outside startup ecosystem, where actually I think there's more intent, there's more appetite, and there is actually more interaction in a number of different ways. It's not perfect; it's still a bit fragmented, but there's more activity. There's more actually connectivity at the early stage rather than the later stage, and there's more incentive to sort of invest or even co-invest with VC, and really looking at things that are going to disrupt their business, not just sort of ad hoc investing in things which might be complementary to their business. Do you know what I mean? That's not a step change. You need to be thinking forward, particularly given how fast technology is moving these days.
Very agreed. And move to Charles.
Yeah, I totally agree, Linda. So because of for example, the technology, especially AI, IoT, it become available and much cheaper and easier to get, and also a lot of talents and the startups doing that. So we are actually investing a lot in terms of transforming, as I mentioned earlier, our headquarters of 4 publicly listed companies belongs to ENN Group, and we upgrade this headquarter company to be providing those capabilities to our ecosystem, including our existing companies, subsidiaries, So, but on the other hand, and this is for big corporation, of course. So we were in a much better position in terms of navigating turbulence like such a pandemic never seen before. But on the other hand, the startups, they are suffering a lot because, it depends on the different sectors. But we do see smaller companies, they suffered a lot because suddenly the demand might not be, it's become fluctuating, So this is where we can pay back to the society, So we are creating we put the ecosystem as a core component of our architecture design, business architecture, so that we can offer to the partners or the potential partners, especially startups, a mechanism to tap into our giant existing established physical infrastructure, as well as a business, as well as the cash flow or order flow. Regarding the IoT and AI and energy, so what we are particularly focusing on, data privacy preserving, for example, federated training, transfer learning, this kind of technology, AI technology based on our IoT data, because we believe that, especially in China, we care more and more about data ownership and privacy. So for this kind of latest technology, we put into our strategic kind of roadmap, so that eventually we can build a better model using our own data, as well as sharing the model with others and leveraging our internal in-house resources, as well as those startups. And of course, we are not investing those into the startups straight away, because it's an ongoing understanding of our business needs, and as well as their capabilities, and also our existing in-house capabilities. So we invest a lot inside, but also presenting the opportunities to the ecosystem, the partners, existing partners, as well as potential partners in the AI and IoT and the clean energy sector. That's, I see a clear picture. And on the other hand, of course, it's not just a pandemic, because there's a massive transformation within China to separate for example, the gas pipeline from the upstream supplier, so that people, the downstream, the business in the downstream can share eventually the more competitive price. So that's also is a massive force in the pushing the enterprises within this energy sector to innovate. So that's a very, very clear trend in China.
Thank you so much, Charles. Moving on to Patrick.
Sure. Sorry, just trying to unmute the phone there. So I agree totally with what Linda and Charles are saying. I think tech has been the big winner. COVID, whereby most people are staying at home or trying to avoid outdoors, social distancing. So tech has been a great winner, because you don't need to be with people to utilize the tech. And there's obviously across the sectors, we also look at, like Charles, like AI, IoT, clean tech, biotech are sectors that are definitely doing well, e-commerce, for instance, and of course, food delivery. But on the other side of the spectrum, where you need physical contact, like restaurants, bars, retail, F&B, all that kind of stuff is not doing well because of the physical restrictions. And obviously we're going through a tougher time now because the winter is coming, and then there's more restrictions all across Europe and other places. But on a positive note, it's not just companies or individuals. We saw last week in China, in Shenzhen, the Chinese government is launching its digital currency. And it launched sort of like a lottery game last week in Shenzhen, where they tried to issue, I think it's something like $1.5 million equivalent to people, and over 2 million people applied for the lottery. Prizes were given out, and that was a way of just testing how it would go. So blockchain is also another very good technology that we're looking at. It's going to be transformative. It's taking a lot longer, at least in terms of cryptocurrency, for companies and governments to adopt. So that's another thing. In Hong Kong, for instance, a big wave that's been hitting and doing very well is fintech. As I was saying before in my previous answer, we have a lot of Chinese companies coming back from the US to Hong Kong to do listings. And actually it's turned out to be a very good year for IPOs. It's been very hot, and fintech and all tech related stocks have done extremely well. So again, I was saying that companies need to evolve, just trying to bring up the stats here. But in terms of Ant Finance, for example, it's now shifting towards tech and services. So we look at the stats here, it says asset management is $173 billion in proprietary money market, and China's the largest. Lending, they're lending $290 billion in consumer loans issued by 2021. online payments, 17 trillion US dollars has been processed via Alipay in the 12 months through June. And in insurance, $170 million of money has joined in their insurance plan. So we're seeing that all the companies are adapting, adopting, and COVID, I think, has not changed things in terms of their business model. I think what's changed is COVID has accelerated some of these industries and companies, and that's been a good thing for fintech. What we're also seeing in terms of the listings in Hong Kong, for instance, in this year, it's jumped 33% this year to 220 billion Hong Kong dollars, which is roughly 30 billion US. And in terms of the fintech, the unemployment rate, for example, in Hong Kong now is almost like a very low at 3%, which is something that nobody would have predicted at the early times of this year. Another area that we've been reflecting on recently is that we've doing a lot more in terms of sustainability. We're now looking to achieve at least 5 to 6 of the SDG goals under the UN SDGs. And of the 3 is obviously climate change and environmental. So we've been looking a lot more at food tech and ad tech, which is becoming more and more interesting. Number one is if the company is more purpose driven, then you're able to attract higher talent, which is not driven just by their compensation, but also in terms of what problems do they want solved. Secondly is that products and services, which purpose-driven companies try to do, millennials, younger people nowadays are willing to pay extra if they're actually doing more for the planet. And I think obviously we're seeing a lot more on Netflix and some of the content that we're seeing globally. There's a lot more education and raising awareness of green finance, especially also in Hong Kong, for instance. There's been a lot of talk and movement towards trying to do more green finance and making Hong Kong into a hub for sustainability, which is also obviously really good. Going back to my previous example, Fubo TV, when we first invested, this was 2 years ago, it was a company that was doing digital humans and animation. And after 1 year, we merged it with a company which was listed in Germany called Nextway, which then became a 10x more valuable company, which did software. And in March of this year, when we merged it with another company, it became Fubo TV, which is the Netflix of live sports. And we saw the opportunity. That's why we had to close it during that dangerous time in March when the COVID was going around the US. And the reason for that is we predicted and saw that people would have to spend more time at home, and content is king, but you needed the platform to distribute the content. And luckily we were proven right. And that's been one of our best investments to date. So the new normal presents a lot of opportunities. And I guess the trick to all investors is to spot the opportunities and to get in early, and that the returns could be even higher than the normal before.
Thank you so much, Patrick. That is very insightful. Moving on to Kun Sam.
Okay, so let me talk on behalf of the bank rather than startup, because we did a lot of digital transformation. So by the way, we have to give the credit to Rice team, who actually has driven Krung Si to start the digital transformation, I think 5 years back, right, Poi? So we started with the Dr. Kit in Rice to become this corporate venture capitals. That means that we have the pain point at that time for doing the digital transformation. Some part that we would like to find the technology. It basically, we just have the 2 options. If we could not do it in-house, so we just rather use the startup. So that time, that's why it become the my department doing working for the fintech or startup, and then become and investing to get the first right technologies onwards. So basically, so Krung Si right now, I think we heavily focusing to work with partners. So we find the tech firms or startup to work with the business unit in Krung Si. So right now with the digital transformation, I think among the 30 business units, we have been all entirely working with startup. I think with at least now, I think with 50 startups and come out with 80 projects already for 3 years that we have been opening this department. So this is part of what we have been doing. So the other part that we do in-house, like Charles said, that like AI, somehow we couldn't find a startup to do the AI. So we need to create in-house AI for chatbot, for call centers, even the voice and non-voice. And we heavily focus on RPA, robotic process automation, to lean the process in the bank. So we have a lot of process to do. So this part that we basically do the in-house, just working with some big software firm. So overall for 5 years, we continuing doing the digital transformation. We've been focusing on this one, and we're still keeping to find partner to build to move from traditional bank now to the tech bank in the future.
Thank you so much, Kun Sam. I think our time is up. Thank you so much for all the panelists and our attendees who are watching us right now. And I hope you have a good day. Take care.
Thank you.
Bye-bye.
Thank you.
You're
Thank you
welcome,
very much.
everyone.
Thank you.
Thank you.
Thank you.
ขอบคุณค
You're
รับ
welcome.
Thank you, everybody.
Bye.
Thank you.
See you.